Hello everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It is Tuesday, and a pretty uneventful day in the market today, kind of mixed, and I think that's kind of really what you got to say about it, was mixed today. Basically, the consumer price index is up significantly, but it is not, it's down a little bit from June. The current consumer price index is up 8.5%, but it's down from 9.1% in June. So we seem to be getting a little bit of a respite here. The interesting thing about the market is basically the Dow Jones was up, so was the S&P, the Nasdaq, and the Russell 2000. So most of the action was in the Nasdaq and the Russell, and so those are looking pretty good. Just have a number of things I want to go through before we get to the questions here. This is on the Tesla chart, and I want to show you that really quickly. If you're watching on YouTube, you can see the chart here, and it is moving up kind of throughout the day. I did make a second buy today, and it is a half position buy, so kind of interesting in that. Let's for TikTok people, let's put up the chart. TSLA, of course, is the symbol for Tesla. Tesla is going to be splitting 3-for-1. The date of record for Tesla is the 17th. So here's what needs to happen for you to get to take advantage of that split. I'm gonna go over to the chart right now. Let's see if we can do that. There we go. So this is what's going to happen here. Currently, Tesla is trading. It closed at 883.07, and it was a significant amount of movement up, about 3%, 1% up in terms of the volume, and we're basically at almost the average daily volume. I want to show you that on the chart. That's basically right here. As you can see, that blue bar is coming up to that level there. So we do have a improving relative strength. Currently, the relative strength on Tesla is 86. That means that it's in the top 14% of all the shares right now that are being traded. So that's very interesting. I did come in with a second position. And I did move in with a second position, so I have a full position now. Let's just see if we can get to that. There we go. Let's see. I've got to go to. There we go. All right. No, I put it in there. Yeah. So if you can look down on the bottom of the chart, my first buy was at 881, and today I did buy another position at 883. So almost no difference in terms of that those buys there. So kind of the same on that. We're going to be trying to build a position into the date of record. The date of record, of course, is the 17th. Now, what will happen is if you have a share of Tesla on the 17th or before, you will get a special stock dividend of 2 shares. That will be happening on the 24th of August, and then on the 25th of August is when you're going to see the shares trade as split. So kind of interesting there. All right, let's take a look at the stock of the day. The stock of the day today I have is Albemarle. This is a lithium play, and one of the largest lithium miners in the world, and it's definitely getting ready to move. It's moved above the reversal line. Let me use on for TikTok people. Let's flip that camera, show you kind of what we're talking about there. This is the reversal line here. It's coming up out of a cup with handle formation. And of course, if you've been watching me for any amount of time, you'll know that this is one of the primary formations that you have in can slim trading, a cup with handle, and this typically means that the strength is getting better. Currently, the relative strength of Albemarle against the rest of the market is 98. That means it's in the top 2% of all shares currently trading, and that is very, very interesting. It has moved up very, very nicely, and the question is, can we buy it? Well, if we're looking at a early entry, we're looking at about $250 a share, but the actual buy point up here is up here at a 270 at about 273 here. So it is moving up towards there. Obviously, no guarantees or anything like that. I'm not in the stock currently, but I'm definitely looking to start a position here because I do think that it is looking very good in terms of in terms of things. I do think it is looking very good. It's in a good area. If you rate the area, it's a little bit weak in terms of the area of the market in terms of chemical specialty, but this is primarily a miner, so that's one thing you have to look at here. All right, let's kind of go through the fundamental analysis on Albemarle. What I'm going to do is I'm going to move over and show you that here. Hopefully you can see this from TikTok. It did just come through earnings, so the earnings were up in terms of earnings, 91% quarter over quarter. Now, we did have a very, very nice improvement in profitability. The profitability was up in terms of the earnings, up 288%. As you'll notice, this market, which is not a very strong market, has been tending to attract more of the commodity stocks, the miners, and those kind of things, and not the traditional Nasdaq stocks, the stocks that are associated with technology. So even though this is an important area of technology, lithium is a major industry. Lithium mining has not been a major industry, but it is now becoming such because of the demand for the lithium-ion batteries. So that's something that's definitely been ticking up as of late. Let's just take a look quickly, and I think before we get to the questions, I have a. Yeah, this is the layout, and you were not going to be able to see this on TikTok, unfortunately. You're only going to be able to see this on YouTube. Now, if you're on TikTok and you want to take a look at what I'm showing on TikTok, you can jump on over there. Very, very easy to do. Just go to the profile up here, click on the link, and you will see the profile for the show that we're doing today. Currently, the small portfolio is like this. I am basically about 58% in cash currently, with a large position in PBR. This is Petrobras. This is a Brazilian oil company. It's doing quite well. Also, I do have another position in ExxonMobil. That's kind of a safety position. And then I do have a position in Ollie's Bargain Outlet. And Ollie's Bargain Outlet is one of the companies that will likely benefit from a move in the stock, a move in as retail moves from high-end like Kohl's down to some of the lower-end stores. This is a company that does wholesaling of overstocks from other companies. Many of the large retailers have large amounts of inventory building up. Ollie's will buy this and then hopefully retail it. So here we go. All right, let's start with some of the questions. Thanks for holding, everybody, so much. All right, let's look at Amgen. Amgen, interesting stock. Of course, this is one of the big biotechs. It is profitable. So that's kind of interesting here. Let's evaluate this. Let's see if we can get a good buy point on this. I don't think this is buyable, but it might be. Very good. Okay. Well, no, actually it is. I'm sorry, I spoke too soon. I haven't been looking at this chart as much as I probably need to. Let's pull this up for everybody watching on TikTok. Here we go. Basically, Amgen, of course, is a therapeutics company, and very, very large in that area. Currently, it's coming out of a cup with handle formation, and it does look like it's moving up to the to a buy point. Currently, very, very strong in terms of its checklist. It's an 89% checklist on this one. So this probably is buyable at the current situation. The question is do we want to buy this one? I'm not totally sold on it. Let's go to the weekly chart and see if it's coming out. Yeah, it's coming out of this very nice cup with handle formation, and it's coming up to this buy point. The buy point here is on a flat base. It's a stage 1 flat base. The lower the stage, by the way, on the on the base pattern, the better. The better. Now there is a pivot at 258.45, so it's moving up towards that. You probably could do an early entry here. So let's see if I can put together an early entry for you. And basically, what I do for this is I look to see kind of how it is trading. And I basically do, a reversal line. The question is it above that reversal line? Well, it looks like it has just peeked its head above it. So I would not be as aggressive here with an entry. So I would be careful here. I want to see it. I want to see it move with a little bit more strength. So here's my point of view on this one. I think you need to wait, and I think you need to wait for a little bit more strength and see if we get another strong day tomorrow. So I'm going to say watch list on this one, and it is good. It's in a very strong area, the medical biotech area, and I want to kind of point this out to you. Very strong area when it comes to strength. This is the third strongest area, and this is one of the strongest stocks in that area. But the question is, do we want to buy this one, or do we want to buy or do we want to buy an ETF? And I think that in this case, especially in biotech, we want to consider buying an ETF. Why? Because there's more stocks that are in the biotech area than any other area in the stock market. So what I would recommend taking a look at, instead of Amgen, but still with a large component being Amgen, is the BIB. And this is an ETF that I think could be bought. Now, I think it is starting to make its move. If we look at the reversal line, it's moving above that reversal line. It's almost at the 200-day moving average. So this is one that you might want to look at. Now, this is not a stock. This is an ETF, and it's in the biotech area. So this is one that you might want to substitute potentially for Amgen. So I would say, it's probably a good idea, to take a look. Take a look at BIB, because this is a way that you can basically, you don't have to decide specifically on any one stock. It's an ETF that covers the entire sector of the economy. Now, currently, this sector is doing very, very well. Obviously, this is an ETF, so this gives you the wrong idea here. But in this sector, the biotech sector, this is basically 3 out of 197, so very, very strong when it comes to that. Let's take a look at the competition on Amgen, to just take a look to see kind of what's going on here. AMGN, of course, is this symbol, AMGN, and what I'm going to do is I'm going to look at the entire sector that Amgen is in, and of course that is the biotech sector. Now, the leading stock in this is Vertex, VRTX, and I think that's when we ought to look to see do we have an entry for Vertex, because that one I think might be a little bit better. Now, here's the problem. Unfortunately, with Vertex, I bring this up and I give you all this lead up here for Vertex, and unfortunately, we are extended here. So that's probably the best thing to do, is probably to buy the BIB. That's probably going to be your best bet here. So that would be my guess. So if you want to look at Amgen, I think you ought to wait a little bit, see if it continues to be strong, and then if it is strong, then then possibly move into it. But if you want to buy the whole sector, I think that's a better way to go, and that would be with the BIB. That's the ProShares Ultra Nasdaq Biotech ETF. So that one might be a good alternative there for that. All right, let's take a look at some of the TikTok people. Thank you so much for holding. I'm looking to see Thanks. Oh, I added out. Oh, great. Here's somebody that says, thanks. I added ALB to my watch list. I don't think you're going to be disappointed, hopefully. It's not showing up on, it's not showing up on YouTube. Oh, I'm so sorry. Sometimes I get these wrong here. Okay. I'll just see thanks. Okay, this ALB. Oh, let's see if I can see. What I'm trying to do here is I'm trying to find the messages here. ABEV, ABEV. Let's take a look at ABEV here really quickly. So let's take a look at ABEV. I think this is Anheuser-Busch. By the way, okay, no, I'm sorry. This is Ambev. This is the old South African brewing company, and of course they own Ambev owns Budweiser as well as I think Miller. I can't remember all the brands that they own. They own a lot of brands. The question is it time for this brand? Well, I am not potentially. Alcoholic beverages are good in recessions. They always have been. So the Philip Morrises of the world are always good in this kind of period of time. But I don't know if you want to be in it right now. The sector itself is not. It's performing pretty well. It's 27 out of 197, which is basically the top 10% of all all ones out there. But I think they're better bets than this one. And one I kind of want to. You must possibly take a look at is Celsius, and this is the new energy drink that's come out, and I do think that this one, it does have distribution with PepsiCo, so this is one that you might want to possibly look at here. It's called Celsius, and the symbol is CELH. Now I don't know if this is in a buy zone. It is literally right above a buy zone. But this is what I want to point out to you. I want to show you the comparison between Ambev and Celsius. So let's see if we can do that really quickly here. This is Ambev and so AMBV. And if we're in the drink space, did I get that right? Let's see. We will look at Nvidia here in just a second. ABEV. There we go. All right. So that gives us a nice comparison here. Let me switch over to that on TikTok. On YouTube. So let's do that really quick. Okay, here we are comparing. Basically, we're taking two different. We're taking two different beverage companies, and we're sort of comparing them here. So hopefully we can see this here. I'm going to kind of move this over here a little bit. Yeah, there we go. So the one on the top, Ambev, the one on the top is Celsius. So that's definitely one that I think you want to look at. These are the energy drinks. These are the overpriced energy drinks that you see in many stores, but it's doing very, very well. Comparing to Ambev, this is the alcoholic beverages, and as you can see, if a year ago you were to invest $1 into Celsius, you would have currently in your pocket $1.35. So that's pretty good. If you invested in Ambev, though, you would have only 95 cents. So definitely, this is the one you ought to look at. If you're looking at beverages, it should be Celsius. That's probably the one. Even though it's non-alcoholic, it is performing much, much better than Ambev. So it kind of gives you a look-see at that. All right, let's take another question. Thank you very much. Let's see. Oh, CLH from Matt. Thank you, Matt. Always like to hear from you. Let's let me see. Let's go to CLH. I don't know if it was Celsius. So Celsius is CELH. This is Clean Harbors. Interesting. I don't know this company. Okay. Collection, transportation, and treatment and disposal of hazardous waste. Well, this is kind of a company that if this new bill may be favoring a company like this. It's coming out of a double bottom. So let's put that up on the screen here. All right. There we go. And this is Clean Harbors. Really don't know what to think about this one. I haven't really been looking in the pollution control area. It is, it is a relatively good area, 23 out of 197. But the question is, can we buy it? Well, there is a buy point on it at 115. And the question is there a sign of accumulation? And definitely there is, based on this volume. So, interestingly enough, I do think that you could possibly start a position here. I wouldn't do a full position. I'd probably do only a half position. The interesting thing with double bottoms, we're seeing a lot of double bottom patterns right now because the market is recovering. We are in a short-term bear rally. Okay, and these tend to be very, very, very strong. The general trend of the market is still downwards, but we're in a bear rally. Typically, these things last from about 3 weeks to about 7 weeks, and in that period, you definitely can do very, very well. There's a double bottom pattern on Clean Harbors. Don't know much about the company. Let's see if I can find out more just by looking at the weeklies and see if we can find out if they have just come through and what their situation is with profitability. So I'm looking to see it. There we go. All right, so we're going to see here in a second. Hopefully, it's going to give us the information regarding the, well, not quite yet. Got a little bit of, yeah, there we go. Okay, so it just came through earnings. Sales are up 46%. That's terrific. And let's see if I can move that over for the TikTok people. Let's do that right now. Okay, there we go. Hopefully you can kind of see it. A little bit of a situation there. But the sales are up 48%. The profits were up 105%. This is really amazing when you consider, and look at this this chart. The weekly chart is looking very good, actually. Considering everything, we're coming right up to this very nice pivot, 91 relative strength. That means it's in the top 9% of all performance now. Lots of funds are coming into this, 608 funds currently. 57% of all the shares are owned by funds on this one. Cash flow is very nice at $9.44, giving this a PE ratio of 21, which is a little bit on the high side. So what I would do on this one, Matt, you've picked out a very, very good one. This is coming off of two cup with handle patterns, which is very, very strong. So I think you definitely could start. You could move into the position. I think this is buyable, and I'm going to put that in buyable. And this is a Clean Harbors CLH, and very interesting chart. So I definitely think it is buyable, and definitely looking pretty good. And it's in a good sector of the market. So at least for right now, remember, when you buy something like this, you need to be extremely careful because we are in a bear rally, and in a bear rally, the stocks will move up, but you must move your stop losses up. You want to set your stop losses basically at 7%. So remember, to set stop loss at 7%. And what do I mean by that? Well, what the stop loss is that if you use position trading, you will if you set the stop loss at 7%, the maximum you can lose on the value of your portfolio is 1%. Interestingly enough, not that you want to do that, but that gives you extra protection. So what I mean by this is that what a position is think of your portfolio as a pizza with 8 slices. One full position is 1 pizza slice, or about 12.5%, and that is what you want to go in with. So typically, The way to move into a position is if you're below that pivot, if you're below that buy point, 1/2 position. As it moves through that pivot or that buy point, another half position. And then remember, continuously set your stop loss at 7%. An easy way to calculate that is add up the amount of cost that you put in for the number of shares for one position, multiply that times 0.93, and that will give you the place to set your stop loss. And always just remember to set your stop loss good till cancel so that it won't run out. All right, let's look at Nvidia. Thank you very much for that. This is coming from TikTok. This is a TikTok question. Let's see if we can put that up. Okay. And this is coming from TikTok. Oops. So, all right, so on this one, we want to look at Nvidia. NVDA, of course, is the symbol for that one. This has kind of had one of the main problems that we're having with Nvidia is that Nvidia is what they call a fabless semiconductor company. And a fabless semiconductor company does not manufacture their own chips. They use a company, and many people use that, called TSM, Taiwan Semiconductor Manufacturing. The problem with Taiwan Semiconductor Manufacturing is that currently the Chinese Communist Party, Navy of the Chinese Communist Party is threatening invasion of Taiwan. So the ability for Nvidia to manufacture chips is severely limited because that particular chip is only currently made in Taiwan. Now, they are building fabs in this country to do the same thing in the United States, but they probably will not be ready for 3 years. There are other companies such as Texas Instruments, ON Semiconductor, that actually make their own chips. But the problem with AMD and Nvidia is that they do not make their own chips. They're made at TSMC in Taipei, Taiwan. So this is a difficulty. Today, what happened was we had on Nvidia, we had a nice movement up, about 13%, almost 6%. But remember, here's the problem currently with Nvidia. Nvidia is trading below the 200-day moving average. This is a place you do not want to buy a stock. You want to wait until it moves above that 200-day line. Why? Well, the reason is simple. Above the 200-day moving average, that shows where the funds, and this is what moves the market, not the individual retail investors like us. It's the funds that move the market. It is below that, so the funds are still not moving into this issue, even though they have tremendous profits and it's a great company. So here's what I would say about Nvidia. I would say that right now it just doesn't work, and I would not recommend. I would not recommend it. So I would, wait on this one. I would watch list, but not buy. And this is just simply because even though Nvidia makes the best GPUs in the world, graphics processing units in the world, the problem is they have to make them at Nvidia. At TSM, Taiwan Semiconductor Manufacturing, and because they do, that limits the amount of supply. And so, even though they have pricing power, they do not have supply. They do not produce enough supply. So, this is an issue with Nvidia. So, my take on Nvidia right now is to hold off, watch list this one, see if it can, see if they can get their supply chain working. And even though they have an excellent checklist at 78%, I would really kind of hold off right now because it is trading below that 200-day line. And that's very significant. It's more than 15% off of its all-time high, which makes it not as attractive, I don't think, as some of the other stocks. I want to show you the stock that might be attractive to you. And of course, this is an area that you may not be too excited about. I don't think I'm very excited about it, but I definitely own this stock. This is the oil and gas area, and we're looking at the Brazilian National Oil Company. Its symbol is PBR, kind of like Pabst Blue Ribbon, and that symbol gives us Petrobras, and Petrobras is doing very, very well. It's right in the buy zone right now, and I want to compare this one to Nvidia because I think that's the only real way we can show it. Is that let's compare if we bought Petrobras versus Nvidia. Now I realize that these are in two different areas, but I think it's very stark when we look at the comparison on the chart that I'm putting up here online. So let me do that really quickly. Okay, super. There we go. And people are looking at this, of course, on TikTok. Let's see if we can show it on the. Let's see if we can show it on YouTube here. So let me go over to the chart on YouTube. There we go. All right. So here's the thing: if we were to invest it in Petrobras at the beginning of the year, $1, we would have almost, and this is incredible, almost $2, about $1.95. This is appreciated almost 100% in the last year. But what's more incredible is in the last 3 months, this has appreciated almost 60%. Okay, so this is Petrobras, symbol PBR. Now, if we had invested the same amount of money in Nvidia, we would have had a little bit of a gain, but nothing like Petrobras. If you can look, you can compare these two. So, my take on this with my take on it with both of these stocks is we really have to be concerned with this. We want to be in the right areas of the market. The market, with this inflation that we have, the number one inflation hedge, and this is what people will now tell you on CNBC or anywhere else, the number one inflation hedge is oil. The world still runs on oil and gas, and it has for 120 years. So inflation, you don't want to buy gold in an inflationary period. You want to buy commodities, and specifically oil, because that oil is what runs the world, and it's what is in most demand. So that's the kind of thing that we need to very much look at. Let's go and see if we have some questions from Charles. Thank you very much, Charles. I think I'm just going to tighten stop loss and see if it climbs to 80. I think you're right. Very smart on that. Right now it's a good time to tighten up on your stop losses because we're going to get a pullback, but at least we're in this bear rally, and I do expect it's going to run probably about another 4 or 5 weeks. That's my guess, and then not so much. All right, let's look at this question from TikTok on EVGO. EVGO. This is an interesting one as well. This is basically a charging station network. Now, there's a number of stocks that are in this range. One of them, of course, is EVGO. There's another one called ChargePoint. So it's EVGO. And then there's Blink Charging, BLNK, and let's look at EVGO, Blink, and ChargePoint, CHPT, I think that's it. All right, so let's look at EVGO right here. Come right above the 200-day moving average. Let's put this up for everybody on YouTube. There we go. All right, so this is EVGO, and this is a question from our friends over at TikTok. This is for our friends over at TikTok. It's just moved, interestingly enough, right above that 200-day line. So definitely like to see that. Really, this is where you want to start looking at potentially buying the stock at or above the 200-day moving average. You don't want to do it below that because that it shows institutional weakness. So that's a good thing. We have a very strong, nice relative strength of 90 on that. So this is in the top 10% of all stocks currently in the market. At the group that it's in, electric charging and power equipment, is 84 out of 197. So that is also not quite as good, but also very, very strong. So let's look at the checklist to see. All right, well, the checklist this is where it's starting to break down here a little bit. 67%. This is my minimum for buying. So that is a little bit concerning there. Now, the question is, let's look at it against its peers. That's always so important, because we don't just want to buy the right stock. We want to buy the right stock in the right sector in the right order. That's all very important. So we're looking at EVgo. We're looking at Blink, BLNK. Let's put that one in. And let's put in ChargePoint, CHPT, I think it's it. Is that ChargePoint? Is that right? Yeah, ChargePoint. Okay, so let's take a look at all of these and compare them together here. Let's push this over to the camera here for TikTok, so we can see that. And I'm going to put this one on and do this comparison. I've started doing these comparisons because I think they're very instructive in terms of what stock is doing what when. All right, it definitely looks like EVgo is the choice. Now, here's the thing about EVgo. It's almost flat for the year. If we started with $1 back a year ago, we would end up currently with $1 on it. So basically flat. On ChargePoint, which is sort of the other competitor, that's lost ground. It's about 65 cents. So it's lost about 35%. The same is true with Blink Charging. So EVgo definitely is the stock to be in this area. The question is, do we want to be in this area? Well, if we jump on over to the weekly chart, let's look at that. If we look at the weekly chart, look at the overall trend of this. Unfortunately, I just cannot recommend this stock, and the reason I can't is very simple. We have a downward trend. This has moved essentially from, if we were back in March of 2021, the stock was selling all the way up here at 23. That's terrific. Unfortunately, it's selling for $10 right now. So it's lost over 50% of its valuation. Even though they do have increasing sales and they finally are starting to be profitable, I just think it's a no-go on this one. They have a very poor 5-year, their price to earnings ratio is about 609, which just doesn't make it. Their cash flow is 7 cents a share, not looking good. So I just can't recommend EVgo. So for this one, I just have to say no on EVgo. Now, they may end up with some governmental subsidies, because the government is trying they're trying basically to pull out all the stops to favor General Motors and Ford, and of course they don't have any charging stations. So EVgo might benefit from this, but right now that's not the case. Tesla, on the other hand, does have charging stations throughout the United States, so they are sort of in a better position than some of these other companies. So I would say no on EVgo. It looks good, but I think that looks are deceiving here. I would be extremely careful on that on that as well. All right, we have a question from a Chinese solar panel maker, DQ. I am not a big fan of the Chinese stocks because they do not use generally accepted accounting principles, and their books are questionable, and that is definitely the case with DQ. But their stock is traded in the country, and it is you definitely can take a look at it. I'd be very careful with this stock because it does, again, have questionable financials. And let's look at the daily chart on this one. We are above the 200-day line, which is a good sign. We are above the buy point, which is a good sign, and we are above the 50-day line. So all those things are looking very, very good. It's pulled back to the 50, and it looks like it's getting a little bit of upward momentum Currently, the price is 70.75 in the after hours trading. It's up. So there definitely is something going on there with DQ. This is a solar company. The solar panel companies have been leaders as of late in terms of the market. And of course, this is based on the anticipation of tax credits. That's what's pushing this group up. But the problem with this, of course, is DQ. This depends on a good relationship between the U.S. and China, which is deteriorating. So I'd be very, very careful trading DQ, only because it may pull back very, very sharply. But currently, the relative strength is very good. It's 98, which means it's in the top 2%, which is excellent. The question is, can we trade that another way? I think a safer way to trade this area is to trade the ETF for the solar panel industry, and that's TAN is the symbol on that one. And that one is, I think, it's a little extended, but if you want to trade the if you want to trade something like DQ, I would consider I would consider possibly trading the ETF, because in that way you're gonna trade everything in the group. One of the advantages, of course, this is called the Invesco Solar Etf, symbol TIN, and it is 95 relative strength. It is a little extended. I probably wouldn't buy it here. A little bit different buy rules on ETFs versus individual stocks. In ETFs, you can buy them typically more extended. All right, so let's take a look at Invesco. This is one I think that I would recommend instead of DQ. This one has a very strong checklist, 67%. Remember, we don't include as many of the checkpoints as we do on the individual stocks as we do on ETFs. So very good, very good. Let's look at the technicals. We are a little bit extended. We're about 6% above the 10-day line, and that, of course, means that it's a little bit extended. So here's what I would do on this one. I wouldn't buy this one. Wait for a pullback, possibly to about, let's get a number on this one, about 82. If this pulls back, currently we're trading at about 89. If this pulls back to about 82, that would make it in the buy range. All right, well, that's pretty much it for today. Thank you very much, everybody, for bearing with me here. And let's see if we got everybody's question. We did DQ. I think I'm going to tighten them some. Yeah, I'm going to take profits. Good time to take profits, by the way, always. If you've got them right now, this is a trader's market. This is not a buy and hold market right now. It's a good time to hold, not to hold, to take your profits when you get them here. So very, very good advice there. All right. I just want to ask everybody, if you could, it would be so nice if you could go ahead and like this. That would be wonderful. Please like it. I love it when you like it, because that gets me out to more people. We have over 100,000 people that are watching us on TikTok. Hopefully we can get to that on YouTube. We're doing pretty well. But it's really important that we get that we get a big like on that one. I have one last thing that I want to talk about, and that's Coin. That's the Coinbase company, and Coin is going to be in massive trouble because they're going to have lots and lots of redemptions. That's happened to Voyager and some of the other ones there. I would really be careful with this one. I would not buy this one at all, because it just doesn't look good on this one. There's some serious regulatory problems on this one. As you know, Voyager went bankrupt, and I'm not saying that Coin is going to happen with Coin, but it may. So be very, very careful on this one. I would not be a buyer on that. So without further ado, please like the show. I really appreciate it. And if you're not already a member of the Free Action Trailer, it's super easy to do. Just go over there to www.Dallas Trading Floor and sign up. It's free, which is always good. Just www.Dallas Trading Floor. Please like the show, and we'll be back tomorrow at 5. Thank you so much for watching. Please tell your friends about the show, and I will be back tomorrow. Jim Malone at Dallas Trading Floor.
for tier 3, starting with what you have available this week.